You know, massive global events don't just stay locked in the headlines. They ripple directly into your wallet. Today, we're decoding the exact pathway these shocks take. We're tracking them from the global stage, straight down through the markets, into corporate boardrooms, and ultimately right into our daily lives. Okay, let's dive into this. To connect the dots of all this recent global news into one cohesive briefing, we're using a three-tiered structure for today's explainer. Section 1, Global Macroeconomics and Markets, Section 2, Corporate Strategy and M&A, and Section 3, Geopolitics and State Policy. Starting right at the top with Tier 1, Global Macroeconomics and Markets. Lately, we've seen some cooler inflation data, right? And that's tempted a lot of folks to basically declare the economic battle won. But former Fed Governor Kevin Warsh is aggressively pushing back against that whole mission accomplished narrative. In his recent testimony to the House Financial Services Committee, he sent a crystal clear signal. Central banks are holding an unwavering commitment to price stability. So, no, they are absolutely not taking their foot off the brake just yet. Now, what's really interesting about this is that while central banks are keeping this super cautious stance, the broader market is putting on a fascinating show of elasticity. We just saw these heavy, sweeping sell-offs in AI and tech-related stocks globally, literally a massive jolt of volatility. But then, almost immediately, Asian equities, specifically looking at South Korea and Japan, they acted like a coiled spring, stepping right up to recover those losses. So, what's the big takeaway for Tier 1? Well, it's kind of a tale of two realities. Economic managers are playing it incredibly safe, totally refusing to declare an early victory on inflation. Yet, the markets themselves, they've got this underlying resilience, finding ways to just absorb those sudden tech shocks. For us, the average investor, it means navigating this tricky space, caught right between top-down caution and a bottom-up bounce back. All right, moving down into the boardroom chess moves with Tier 2, Corporate Strategy and M&A. $81 billion. Let that sink in. That is the staggering scale of the proposed merger between Paramount and Warner Brothers Discovery. We're not talking about your run-of-the-mill business deal here. This is a seismic chess move designed to completely reshape the entire entertainment landscape. It perfectly highlights the immense stakes when media titans try to consolidate that much power. But look, an $81 billion mega deal doesn't just happen in a vacuum. It actually slammed right into a brick wall of antitrust action. 12 U.S. states sued to block the merger, and a federal judge literally just slammed the gavel down, granting a temporary restraining order to halt the whole thing for at least 2 weeks. It's a fascinating standoff, really. Immense corporate ambition instantly getting checked by state and federal regulators. Let's see how this builds, because this trend of aggressive corporate posturing extends directly to pricing strategies too. Take Taiwan Semiconductor Manufacturing Co., TSMC, the massive Apple chip maker. They are leveraging their absolutely essential market position years in advance. Right now, they're negotiating base price increases. And get this, by 2027, planned hikes of 5 to 10% are going to hit both their cutting-edge AI chips and their mature chips. Yeah, the ones used in everyday stuff like cars and appliances. So here's our takeaway for this second tier. Massive corporations are making some very aggressive long-term plays, whether it's baking in price hikes 3 years out or attempting these historic mega mergers. These moves will absolutely eventually hit the consumer's wallet, but they aren't going unchecked. These sudden, powerful roadblocks from regulators show that they are more than willing to hit the pause button. Zooming out now to the global board itself. Tier 3, Geopolitics and State Policy. And this brilliantly illustrates how state-level actions are cascading directly down to the markets in two major ways right now. First, looking at the Middle East. Escalating conflicts, specifically U.S. strikes and the Houthi blockade against Saudi Arabia, are severely increasing transport risks. And that is directly driving up the price of Brent crude, our global oil benchmark. Meanwhile, over in the UK, a major domestic policy shift is underway. Incoming Prime Minister Andy Burnham has just taken full government control of British Steel. This is the first major nationalization of his era, and it's already drawing some really sharp criticism from international investors, specifically Chinese investors. The takeaway here is pretty clear. Shifting state policies and international conflicts, they aren't just distant news headlines. They create immediate, wildly unpredictable ripples in global supply chains. They literally dictate the price of gas at the pump and the core cost of raw materials all around the world. So the crucial point is this. When we connect all three of these tiers, a massive central tension is revealed. How can central banks possibly declare a victory on inflation when unpredictable conflicts are driving up oil, and corporate monopolies are baking in price hikes years in advance? You see, the economy isn't just a set of isolated numbers on a spreadsheet. It's a living, breathing ecosystem of international policy, boardroom ambition, and central bank reactions. Keep an eye on these ripples, because they will absolutely eventually reach your shore. Thanks for joining me for this explainer.